China's central bank cuts the benchmark lending interest rates and reserve requirement ratios in a bid to maintain economic growth. China's central bank has cut the benchmark lending interest rates and reserve requirement ratios for commercial banks in a move designed to ensure steady and rapid economic growth. Deng Wei has details.
The People's Bank of China said the benchmark lending rates for one-year yuan-denominated loans will be decreased by 0.27 percentage points on Tuesday. The cut lowers the cost of one-yuan bank loans to 7.2%. It's the first time the lending rate has been slashed since October 2004. The benchmark deposit rates were left unchanged. The central bank also cut the reserve requirement for all banks except the country's 5 biggest banks and the Postal Savings Bank by 1 percentage point. It's the first time the central bank has lowered the proportion of deposits that lenders must hold in reserve since November 1999. The cut goes into effect on September 25th. After the adjustment, banks' reserve ratios will stand at 15.5%. The People's Bank of China raised the ratio 18 times between July 2006 and June 2008 to mop up cash flooding into the banking system. The central bank said the reserve requirement ratio will be reduced by 2 percentage points for local financial institutions in areas badly hit by the Wenchuan earthquake in May. Deng Wei, CCTV.
Well, as you just heard there, the key interest rate cut is the first time in 6 years, while lowering the reserve requirement ratio is the first in 9 years. Guo Yuhua got reaction from economists.
Some industry insiders say the central bank's adjustments are directly related to the macroeconomic data for August, while the move could aim to boost market liquidity.
The banking deposit rate is unchanged, which is aimed to protect the interests of consumers, because the real saving rate now is actually negative. So if the country lowers the deposit rate now, the consumers will suffer the biggest losses.
Many experts also believe there is a huge gap between the lending and saving rate in China. Therefore, it would be much appropriate to adjust the two rates separately. Other experts believe the rate cut is aimed at reducing operational costs for SMEs.
The readjustment is targeting small and medium-sized lenders, which somehow also helps small and medium-sized enterprises because they will have more capital support.
The readjustments have also excluded the country's 5 biggest banks and Postal Savings Bank. Analysts believe the move will definitely help SMEs solve financial difficulties, and it could also help prevent a rush of capital into the market. The only key issue now is how to better allocate the lending resources. While some experts also point out the decreases of the lending rate and bank reserve ratio are positive news for sharing trade, which will benefit stock market structural reform, but some also say the moves could have no effect on real estate market.
相应的更多的可能是一个中长期的这么一个
Most property lending is mid- or long-term loans, but the rate cut this time is targeted at flexible short-term lending. So it was not meant to boost real estate investment, but to solve financial difficulties of SMEs.
But analysts believe the impact for the real estate sector will be minor. They say rate cut for property investors could help them reduce a small part of their interest spending. Guo Yuhua, CCTV.